So we continue with business, IGCSEs, chapter 30, statement of financial position. So when I talk about statement of financial position, we're simply talking about information about the assets, liabilities, and the capital of a business. Information about what? Assets, liabilities, and capital of the business. These are what statement of financial position talks about. So let's go down and say, are you with me, please? Okay. What is a statement of financial position? Most businesses produces a statement of financial position at the end of the financial year. A statement of financial position is like a photograph of a firm's financial position at a particular point in time. It provides a summary of a firm's assets, liability, and capital.
Yeah.
It is also commonly known as a balance sheet. Like I said earlier, it is a summary. It's information about a firm's or a business's assets, liabilities, and capital.
Okay.
We start with assets. Assets are the resources owned by a business. Examples include buildings, machinery, equipment, vehicles, inventory, and cash. Businesses use assets to make products or provide services.
That's obvious.
Yeah, so we call it assets because these are resources that belongs to the business. These are resources that the business uses in providing or producing goods and services.
Yeah.
Clear. The liabilities. Liabilities are the debts of the business. Debts of the business. That is what it owes to others. So liabilities are debts to the third party, things you are owing the third party. That means resources that do not belong to the business. These are what liabilities are. Clear. Examples are short term, such as an overdraft, a long term, such as mortgage. We talked about overdraft before.
Yeah.
An overdraft is a credit facility that allows a bank customer to withdraw more than its available balance, right? So these are part of liabilities. Is it clear?
Clear.
Then the third one, capital, because the items in a statement of financial position are classified into three: assets, liabilities, and capital. For capital, it is the money put into the business by the owners. For limited companies, this will be share capital. It is used to buy assets. So capital is the amount of money put into the business, right? So for limited liability companies, this is through share issues. So you sell shares, the company sells shares, and what comes in return is capital. These are permanent capital. Clear?
Clear.
Any question about assets, liability, and capital there?
No.
Okay. So we go to features of a statement of financial position. The statement of financial positions that's a case study. So what are the features? We're talking about what a statement of financial position contains, the items in the statement of financial position. So we have, for the assets, we have the non-current assets. Why do we call it non-current assets? We call it non-current asset because it can last for more than a year. These are resources that the business owns.
That's not current asset.
Non-current assets. These are resources of the business that can last for more than a year.
For more than a year.
Example, machinery,
Office
equipment, land, building, premises.
Desks, chairs.
Yeah, office furniture.
Yeah.
So these are non-current assets. Clear? We move on. We have the current assets. What are current assets? Why do we call them current assets?
It's the opposite of non-current assets.
Yeah, they stay with the business within a year. So current assets are assets that will be changed into cash within 1 year. So they are turned into cash within a year. Examples are inventory, trade receivable, cash in hand, or bank. So when we talk about inventories, we're talking about raw materials, semi-finished goods, or finished goods. Stocks. These are all current assets. Clear?
I don't get it.
Non-current assets are what the business owns, but they will be easily turned to cash within a year. Stocks,
Okay.
like bottled water, you have them in stock. You sell them to get what? Cash. So these are not current assets. Any asset that can be easily turned to cash within a year is a current asset. Is it clear now?
Yeah.
Trade receivables, your credit customers, they have to pay within a year. Yes or no? Your credit customers, they have to pay. Yes or no?
Yeah.
So because they have to pay within a year, they are part of current assets. Clear? cash in hand, the money you have in the cash at hand, cash at bank, the money you have in the bank. You use them for for transaction, yes or no?
Yes.
Is that clear?
Mm.
So that's current asset and non-current assets. Then other items in the statement of financial position is the current liabilities. For current liabilities, we are talking about business debts, which has to be paid or repaid, sorry, which has to be repaid within a year. That is current liability. Clear?
Mm.
Do you get my point? Current liabilities are debts of the business that has to be paid within a year.
Okay.
Debts of the business that has to be
So
paid
current is basically has to be done in 1 year.
within a year, yes.
Okay.
Clear.
Mm.
Examples of current liabilities are trade payables, your credit
Creditors.
suppliers,
Creditors.
your creditors, thank you. Those are the businesses you are owing that you have to pay to within a year. Clear? Clear,
Yeah.
please?
Yeah, clear.
Taxation is money. Taxation is also part of liability because you have to pay that based on
Tax.
your profit. Leases and hire purchase are also other forms of borrowing. Lease, lease. That means you are able to use an asset for a long period of time without actually purchasing it. Then hire purchase, it means you make a down payment and you pay instrumentally until the purchase or until the total purchase of that asset. Or if you do not pay, then there's repossession. The owner will get it back from you. That is repossession. Clear?
Sure.
And for short-term loans, like we have overdraft, we talked about that. Clear? Then we have what we call non-current liabilities. For non-current liabilities, we're talking about. Oh, before that, let's talk about net current assets anyway.
Oh.
For net current assets, it is current liability minus current assets. Our current asset minus current liability. That gives us our net current assets. Net current assets.
Is current liability.
Current assets, sorry. Current assets minus current liabilities.
Current assets.
Minus current liabilities. That is net current assets. Clear?
Okay.
The difference between those resources that the business owns that can be easily turned to cash within a year and those resources that belongs to the third party that the business has to repay back within a year. The difference is called net current assets. Is it clear?
Okay.
Then we have non-current assets. For non-current liabilities, these are repayments that has to be done more than a year,
Okay.
like a long-term loan, like a mortgage. Is it clear?
Sure.
Then we have net assets. For net assets, we're talking about non-current assets minus non-current liability. Net assets. Net assets. Non-current assets minus non-current liability. Clear?
Net assets is basically non-current.
Net asset is basically the addition of current assets and plus non-current assets minus current liability minus non-current liability. Is it clear?
Non-current liability.
Current asset plus
minus non-current assets.
yes. Non-current assets plus current assets minus non-current liability plus non-current liabilities. You add non-current liabilities together minus the non-current assets and assets, you add them together. So the difference is our net assets.
Okay.
Clear?
Like why do we add more assets?
Current assets and non-current assets will be added together.
Non-current assets and current assets.
Will be added together for your net assets.
Ah.
The value of all assets
Mm.
minus the value of all liabilities.
Okay.
Is it clear now?
So
Is it clear?
so basically current assets and non-current assets will be added together minus.
That's why I said current assets plus.
Non-current liabilities, current liabilities added together.
That's why I said current assets plus non-current assets minus current liability plus non-current liability. Is it clear? Then we have shareholders equity. For shareholders equity, we're talking about the capital, the money put into the business, the money that belongs to the owners of the business. These are shareholders equity. Capital.
What?
Shareholders equity, you don't get it? Are you with me, please?
Yeah, I don't get it.
Okay. Shareholders equity are the money that belongs to the owners of the business. Like capital, share capital is part of shareholders equity. Do you get that?
Non-capital.
No, there's nothing like non-capital. Capital,
Capital.
share capital.
Mm.
These are capital. Share capital is
Yeah, I know.
the amount of money you raised through shares. They are part of owners equity.
Okay, yeah, I get it.
Then retained profit, the amount of profit that the business is putting back into the business is part of equity. Clear?
Sure.
and other reserves. When we talk about reserves, we're talking about the money kept aside for the business.
Sure.
Any question about it?
No.
So these are features of a statement of financial position. Is it clear?
Clear.
So we go to interpreting the statement of financial position. All right. So we go to the interpreting the statement of financial position. A statement of financial position will show the financial position of a business at a given point in time and can be used to evaluate its performance and potential. It shows one, the value of all business assets, capital, and liabilities. When we talk about the value of all business assets, we're talking about what the business owns, the value, the capital, the amount of money invested into the business by the owners of the business, liabilities, the amount owed to third party. Asset structure of a business, which means how the money raised by the business has been spent on different types of assets. So we call it asset structure.
Okay.
Based on the fact that it measures the amount of money or how money is being spent on the purchase of long-term assets. That is what asset structure is.
Sure.
Then we have capital structure, which analyzes the different types of funding the business has used. Our capital structure, we're talking about how did we raise money to fund the business. The value of net current assets, which we know already, the difference between the current assets, the difference between the assets and liabilities. Net current asset, the difference between the current asset and current liability. I think it's clear. A statement of financial position may provide a guide to the value of a business. Generally, the value of a business is represented by the value of net assets. However, there's an approximate.
You say it again?
I'm still reading. I will explain. Generally, the value of the business is represented by the value of net assets. However, this is an approximate value because assets are difficult to value exactly. Also, some businesses have non-physical assets such as goodwill. When we talk about goodwill, we're talking about the reputation of the business, the perception of customers, the perception of the people towards your business. How do they rate your business?
Okay.
The reputation of your business. That's goodwill. So it is non-physical assets. And this thing goes it goes a long distance. It goes a long way to really shape the position of a business against its competitors.
Sure.
Do you get it? So all these things represent the value of a business, so either physically or non-physically. For the physical one, these are like assets and liability assets, like non-current current assets, current assets and non-current assets. We can see them. Yes or no? So, but not only those ones, we also have the non-physical, like the goodwill, the reputation of the business is part of the value of the business. Is it clear?
Yeah.
Any question about statement of financial position?
Profile. A good profile.
Clear.
Yeah.
So we go to
Even having good profile is
profile. Yes, profiling. Yeah. So go to the multiple choice question for chapter 30. Statement of financial position. Question 1.
all right. Yep. 1 to 4. Which of the following is okay? 1. Which of the following is an example of non-current asset? Okay, non-current means an asset. It's more than a year.
Okay.
Okay, now we have inventories, property, mortgage, and cash. Property.
Property.
Yeah.
Great.
Yeah, I mean property. I mean, you own the property.
Thank you. Mortgage is a long-term liability.
It's liability.
Cash is a short-term asset or current asset. And inventory is also current asset because it can be easily turned to
cash can be just
spent.
Can be spent and gain and lose. So
Thank
it's
you.
not.
So go to question 2.
It's not gonna stick in fixed position in fixed
For a long period
amount.
of time.
Yeah.
For a long period of time. Great. Question 2.
If a company's liabilities are
2,399,000 and its assets are
it's net,
5,800,000.
So we need to use the net current.
No,
net current,
they said what is the value of capital? Capital here.
Capital.
You don't know the formula for capital. We have what we call accounting equation. in accounting equation we
add
have
them.
capital is capital is assets minus liabilities. Capital is what? Assets minus liabilities.
Assets minus liabilities.
Yes, so to get that, 5,800,000 minus 2,399,000.
Okay.
Please check. So you could simply use 5800 minus 2399. That's 10 minus 9, 1.
Yeah. Okay. Sure.
9 minus 9 is 0.
It's 2399.
It's B. 3401. Did you get that? Check please.
Yes, B.
Did you calculate it?
Yes.
Asset minus liability.
3.4 million.
And 1,000.
And 1,000.
Yes. So question 2 is B. Question 3, please.
All right. Number 3. Which of the following is an example of a current liability? That's a current liability. It should be in a year.
Yes, please.
Okay. Trade payables. Trade receivables. Mortgage and cash. Say.
Trade payables. Current liabilities. Well done.
Yeah, I know.
Question 4.
And the other one is trade something. Current liability is for trade payables, and the other one is trade
Receivables. Current assets.
Yeah.
Now, question 4. The working capital of a business is given by the working capital.
Okay, number 4. The working capital of a business is given by the working capital. Is capital employed, net assets, non-current assets, not current assets. Net assets.
Net assets
Yes.
for working capital? No.
D. Yeah, it's D. Net current assets.
Why did you choose D?
Capital is the money that you invest in business.
For working capital, it is the capital employed. Capital put into the business to do the job. It's capital employed. So the answer is A. Is it clear?
Oh yeah, sure.
Is it clear?
Sure.
So that ends chapter 30.
I forgot that I didn't know you mentioned that.